Hello everyone, this is Ming Jong. Welcome to today's market analysis for the S&P 500 E-minis futures for the session of 7th of September. In this video, I am going to show you the market recap during the last session and also potential trade reviews on last Friday. Those two trades are based on Wyckoff structures. One trade was based on the Upthrust type of the entry, and the other is just based on a breakout type of the entry after a side of weakness and LPSY, the last point of the supply. And going forward, I will also elaborate a bit more on the four major indexes, which are the S&P 500, the NASDAQ, the Dow Jones, and also the Russell Index, and talk about the overview and the broad market condition. And going forward, I will definitely cover my usual aspects, which is the S&P 500 bias, key levels, and also possible trading plan and setup for the session later. Alright, so let's just get started. Well, as you can see in this S&P 500 daily chart, so we had a sell-off. So it's very obvious, the sell-off. So let me just highlight this. So that's actually the change of character, similar to this change of character or even the previous one that's before May. So last Friday was a bit interesting because unlike on Thursday, last Friday is not as bearish as it looks. So why? So first of all, there are quite a few things that stands out here. On Thursday, we have this big bearish bar with a spike of the supply here. On Friday, we even have a slightly more supply, but look at the results here. In terms of the spread, if we compare it to the Thursday spread, is slightly smaller, but just take a look at the results. We had a demand tail, so suggested demand was in. So definitely there are a lot of the effort to try to push down the price, but still end up we getting a demand tail here, which is looks very decent. And look at where the reaction actually happened. So if we just zoom out a little bit here, and this is the prior all-time high here, so close to 3400 level. So pretty much it had tested the 3400 level and closed above 3400. So at the moment, although we do not know that if this current reaction will continue to have continue sell down, break the 3400 level, or even test the 3200 level, but at least based on last Friday action alone, there was a attempt to rally with the presence of the presence of the demand there. So I will also take a look at the other three major indices, which are the Dow, the Russell, and also the NASDAQ. And let's just compare the market condition with the four major indices. But before I do that, let me just go down to the hourly time frame and let's take a clearer look and also the detail of what's happening for the Friday session. So just prior to the Friday's opening, which is around 9:30 p.m. My time zone here, so we can see that just before that, during the Asian session, we have this kind of the upsloping consolidation. So right after the Thursday sell-off, by judging at the recovery, which is this technical rally, it seems like relatively weak. So definitely from here on, the bias is still down because there wasn't much demand showed up during this kind of the technical rebound. So and the US opening hours definitely confirm that, which we see the continuation to the downside. But just look at the demand tail here. So definitely a lot of the effort tried to push down the price, and we even hit below 3400 level. So it's actually tested the 3350. So subsequently we have seen just this decent demand tail and followed by a nice rally up. So eventually we just close slightly above 3400 level. And if we just take a look at this structure in the H1 time frame, so this is definitely kind of the like a redistribution, or if a pattern trader, this could be the flag structure. So forming a flag, a bearish flag, and then breakdown. So definitely we have a good structure to lean upon and short against in the smaller time frame, which I'm going to show you right now. So on last Friday, I did not have any kind of the trade because I was out and wasn't looking at the market at all. So this just a possible trades based on my review. So as you can see, just prior to the US opening, let me zoom out a little bit here. So here's the context. So we have a very sharp sell-off and followed by this kind of the automatic reaction, and then eventually we have formed a kind of a descending wedge, and here comes the change of character. So this is the selling climax range. So this is pretty much a range, and then produce this change of character. So this is a change of character suggests that the environment has been changed from the downtrend into this trading range, but it's an upsloping type of the trading range. And let me zoom in a little bit here to talk about the exact entry. So as we can see here, that's the change of character, and subsequently that define the boundary of the trading range. We have a bit of the test of the support and also the resistance as well, just close to the market opening session, so which is about 9:30 here. We have seen it actually form a last point of the supply, LPSY. So it's pretty kind of the textbook style of the setup. Let me just zoom in a bit more here. So you can see it here. So here is the localized upthrust. So the smaller structure here is actually this. So this is a very small structure in the 3 minutes time frame. LPSY, the last point of the supply trading range, and subsequently during the market open, the US market open, we have seen this kind of the upthrust action. So I think this could be a very nice short entry. So let me just dive in a bit more. So not only just combine with the H1 structure, so this could be the last point of the supply, but in terms of the volume, so there is definitely effort versus results. So take a look at these two candle, the bullish candle. So that's this candle, the first volume spike here, and that's the second. So these two volume is very similar, but take a look at the results of these two candles. So in the first candle, we have a very bullish bar, so the spread is relatively big. And the subsequent candle, this candle here is a small spread candle, but with the same amount of the volume here. So with the same effort to push up the price, the results that we get is actually a smaller candle with a bit of the rejection tail. So that actually suggests the presence of the supply. And to read in conjunction with the context, so in the H1 time frame is a possible of the LPSY, the last point of the supply, and in this 3 minutes time frame, it actually is a relatively small trading range and creating this kind of the upthrust action. So what we need to see is the confirmation, which is the subsequent bar, the next bearish bar here, actually just reverse and go back inside the range here, this small trading range. So it's just a temporary commitment above this immediate resistance level, and the next bar just go back inside. So this is a pretty classical upthrust type of action, and it could be a very nice short entry here. And the subsequent short entry would be somewhere around here, so right at this bearish bar, or even the prior bearish bar as well. So this potential short trade was based on the breakout trade. So if you take a zoom out look, the wider the bigger picture here, we have this kind of the upsloping trading range, and here comes the breakdown, so forming a sign of weakness. So sign of weakness, and most importantly is the inability to rally up. So actually had a rally, tested this resistance level, so here's the resistance level, and forming immediately we have a reversal. So if we just take a look at this localized swing low, then definitely this bar here is the breakout bar. So if we just want to track the reversal here, then the previous bearish bar could be the reversal out from this bullish bar here. So either way, that could become the nice short entry, and depending how you manage the short entry, then you could be riding this nice downtrend, and I think will likely be stopped out somewhere around here, so which could be a very nice profit here. So very nice reward to risk ratio if you just catch this downtrend or down move. Alright, so this is the potential trade review. Unfortunately, wasn't in front of my computer, was out, so definitely no trade at all. But still, I believe that we have plenty of the opportunities. So just never mind. Opportunities in the market is always there. So just need to watch out for the right timing and also the right structure and with the right setup. Alright, so let me just take a look at the current market condition. So we talk about we'll talk about the presence of the demand right on the Friday's bar. So definitely there's demand here as shown in this demand tail, and subsequently has this kind of the nice rally. So I believe that this could be the bottom for now, and there will be an attempt for rally in the S&P 500. So I think it's very critical to judge the character of the rally. So it could just go down a bit and then form this kind of the rally up to test all these selling bars, the supply zone. So we need to judge the quality of the rally and how it will actually tackle all this supply zone here. So the best case, or the bullish case, the most bullish case would be a test of the buying climax high. So this is the buying climax range here. So this is the buying climax. So we have seen this kind of the climatic move up. So I think the best or the most bullish case, if we see an attempt to rally for the S&P 500, is to go back and test this buying climax resistance here. So that would be the most bullish case. And subsequently, if we just see relatively decent rebound, maybe tested halfway of the Thursday candle, so that could be this is the major sell-off, maybe from here to there, and then go back down. So that is just quite a few of the scenarios that I'm watching out. So pretty much that I think the immediate resistance level and the support level is formed at swing high at around 35.80, and the low is around 33.40. So it could just consolidate within this big channel here. Of course, another bearish case would be failure to rally up. So we have seen, despite we have spotted the demand on the Friday, so if we did not see any kind of the decent rally in fact is a failure, so I'm sure that it will just break the support level at 33.40 and keep pumping a lower low. So the next supporting level that is more significant will be around 33, oh sorry, I think it's 32.20, so which is this yellow line here, the orange line color, 32.30. So that could become a very important supporting level. So 32.30, so that's the area of the next supporting area. Alright, so let me just take a look at the other indices. So for the immediate bias, or I just keep a neutral bias for day trading. So I think as long as we have the chances, then either up or down then can be traded. But for the intermediate swing, then I think we should be able to see an attempt to rally up. But we need to judge how far it will go and the quality of the rally if it really happened, because of the demand that's spotted on the Friday's candle. And in terms of the trading plan, then definitely still watching out for the immediate support level to initiate potential long entry upon a reversal. Alright, so let me just take a look at the NASDAQ, Russell, and also the Dow. I think it's very interesting to see all these four indices together, because just by looking at the sell-off, the reaction that's created since last Thursday. So one thing that is very obvious is we have seen a huge sell-off in the NASDAQ index. So in terms of the magnitude, this is by far the largest down wave that we have ever seen if we just compare in this trend channel here. So definitely since the bottom of March here, we have never seen this kind of the sell-off. So here comes the sell-off, and this is the biggest down wave. And if we just take a look at Russell, so look at the sell-off there. So it's relatively shallow, so it's not even half of the June's reaction. So in June we have a relatively change of character here, but so far the sell-off is not even half of that. And take a look at the Dow. So similarly in June we have a relatively big wave down as a change of character. So here's a trading range, and this current reaction here is about 50% of the June's reaction. And if we just take a look at the S&P, let me just take it auto. Alright, so here's the S&P. Let me drag this to the right side. Okay, and zoom in a bit more here. So we can see that this current reaction is definitely smaller than the June's reaction. So here's a reaction, and here's the June's reaction, here's the trading range. And yeah, so far I think we definitely witnessed the biggest sell-off in the NASDAQ, but for the rest of the indices seems still relatively doing okay. And in terms of the volume, still is a lower supply than June, and similarly in Dow Jones as well, and also in the Russell as well, but not for the NASDAQ. So definitely I think we're going to see at least a temporary pause of the uptrend in NASDAQ, while for other type of the index like the S&P or the Russell and Dow could have some kind of the continuation to the upside if this is a pure rotation from the NASDAQ into the Russell or S&P or even the Dow. Alright, so this is the end of the video. Hope you enjoyed it and get something useful out of my video. If you like the video, just click like and also hover it to my name or picture to follow me. And do remember to subscribe to my channel so that you get instant notification of my future video ideas. And as usual, if you have any kind of the comments, suggestions, or trade ideas you would like to share with me, or simply like me to take a look, feel free to comment it below. I will definitely reply to you. Thanks for watching. I will talk to you soon. Bye bye.